GMGM. Swing Trading Masterclass. In this part of the masterclass, I'm going to talk entry techniques. So, previously I've discussed how to identify your initial trend. So you want to trade a swing trade, you should start on the daily time frame. And so one of the things we talked about was a daily breakout and how to get on board early. So here is a daily breakout. You can ignore all of this for a moment. Here is a daily breakout, BOS. Okay, initially a fake out, then proper impulse candle. Previous lesson has shown how that impulse candle gets you better results and a more probable trend. We then come up into a consolidation that forms here, and this particular entry technique is going to be based around a sweep of consolidation. So let's take these back on. I don't know where these are. There we go. There must be some other things drawn on this chart. So here we have it, a daily close, better entry, sweep of consolidation. So let me frame it first from here. I'm going to talk about a couple of things. I'm going to talk about the daily bands, right? So after your first breakout, your daily bands must be green. Now this is not the only way to enter it. I hope when you watch this, you understand that this is one idea, and hopefully it gives you ideas of other ways to do it and go testing. Don't just blindly take what I say, try and improve it. Try and find something that works for you. So daily bands are green, price is going up. It is setting consolidation. So impulse candle. So take the logic now. We just broke out from this level, okay? So price just broke out from that level with two high volume daily candles, yeah? Rising volume. We spend 1, 2, 3, 4, 5, probably 2 weeks, 10 days above there. There is a wick down on the third day. Then after that, all the price action is up and grinding up and looking bullish. So what does that tell us? That tells us that price does not want to go back into the previous consolidation. So that's confluence to your trend. If this is a false breakout, it cannot take 10 days, right? So it's 10 days. I mean, it can, but it won't generally. So it's 10 days outside. This is now forming a new range or a new period of price. It has marked up. So we're then at a point where it comes down and sweeps a low. Now, you want to see it take out a low, but you don't want to wait for that low. You don't want to act just based on a specific level, okay? You might say, well, why don't I enter? Why don't I put my entry, my position, my limit order, just right below that low? That's not optimal because you don't know how deep the wick's going to go. You can't manage your risk. You don't know where to put your stop loss. On this crazy dump, the wick could have went all the way down there, and where would your stop go? What you're doing is you're trying to get confirmation that price is actually going to go back up. Because when this was happening, and you had this big red day, and then you have this second big red day, it could go further down and trap people lower. So the sweep is the first part, and a sweep is where price sets a level. So it has here, like I have in red. A sweep is where you have a level and then the wick of another candle goes below it, closes back above it. That's sweep the low. False breakout. You understand false breakout, right? Same thing. So then I go to a lower time frame. And what I want to show you here is how you can get a better entry on lower time frames. Because the first way of doing this would be to wait for the daily close, confirm the bands are still green, and take your entry there. So you would enter right on the daily close here. You'd have to wait for the daily close, and then your stop loss would go below the wick, right? Which obviously in hindsight will get you a great entry. You ride it all the way up, but this is swing trading. So you're not necessarily always going to get trends like this that you hold for many, many weeks or even catch the whole bull market. You want to get as good an entry as possible. You want to get your risk as tight as possible so you can get maximum reward for your trades. So if we go to a 1 hour chart, you can take some simple logic and enter a trade based on that. But before I do, I'm going to bring in another indicator, which is volume, as a confluence tool, right? So we're trying to build a trade here. So you've got your break of structure with the impulse candles. You've got a consolidation above the previous range. You've got a sweep of the lows back into the bands with the bands staying green. All of that is good. It's rejected going lower. It swept the low. We would expect this pushes now to new highs. Volume can be a confluence too. So you have two big impulse candles with high volume, right? You can see here in this entire phase, these were by far and away the highest volume candles. What comes after is low volume correction. Remember the trend lessons, the nature of a trend. Impulse, correction, impulse. So your impulse candles have high volume, that's harmony. Your correction has low volume, okay? And even on the deep sweep, there was low volume, right? So the selling volume to get there wasn't even that aggressive. So this is clearly just a stop hunt. And that stop hunt was low volume, right? So volume confluence there. You're not seeing really aggressive attempts to push lower and price rejects back. That's good. Lack of interest to go lower. So that's volume. This volume indicator, by the way, is a different one. You can find it under aggregated volume, and it's an indicator. I recommend you test it though. It's not always entirely accurate on every coin. If you type in aggregated volume, spot on futures here, it's by Haldro, okay? Just, you can look at that, aggregated volume spot futures, Haldro. That aggregates the major exchanges for whatever coin you're trading. Make sure that coin's available for it, and you can easily calculate the volume across multiple exchanges. Very, very useful. Now, we go to a lower time frame next. We go to a 1 hour time frame. So 60-minute time frame, zoom all the way back. Unfortunately, I have to do this manually, unless somebody knows a hack, which I haven't found yet. And we're all the way back to 2021, and we're back into this area. So where am I looking? Here we are. Here's our sweep, okay? And here's our sweep of the lows. So our daily close is marked here. Remember I said if you waited for the daily close, you get entered there, but you can enter here. Why? Well, look at your low time frame 1 hour. You see on the reversal candle, high volume. So you see selling into the lows, you then see a spike of volume, and you see a strong high volume reversal with the bar closing right at the top. That's bullish. The second candle follows that up with another full candle, high volume, full reversal. You could enter there. 2 consecutive 1 hour bars with high volume, especially the sweep bar, closing near their highs. Good. You could enter there, right? You can find other reasons to enter. You could also wait for this consolidation, buy this breakout. You could wait for the bands to flip green, buy then. They would all get you better entries than the daily close. So that gets you a slightly tighter entry to set up your trade and get you in, per the rules, Michael's bands stay green, daily time frame, 1 hour execution. That's how you do it. That's one. That's the first entry method I'm going to show you. There are many more. You can add your own. You can think of ones you could add, and you can start to build your own swing trading systems.